So for our weekly focus this week, the Bank of Korea, in its final monetary policy meeting of the first half of the year, has announced its intentions to keep its benchmark interest rate frozen yet again amid persistent inflation. For more on this, we have our finance correspondent Lee Soo-jin in the studio. Welcome, Soo-jin.
Thank you for having me.
Right, Soo-jin, so the key interest rate is one of the most important economic variables for any country because high interest rates mean that borrowing becomes more expensive, leading people to spend less, lowering overall demand, and subsequently easing inflation. So first of all, tell us what was South Korea's decision in its monetary policy meeting in May?
Sure. So like you mentioned earlier, South Korea's central bank decided to keep its benchmark interest rate steady at 3.5% as widely expected. And this marks the 11th consecutive meeting that the BOK has decided to freeze the rate. The base rate was last raised in January last year to 3.5%, the 10th consecutive rate hike. Here's what the Bank of Korea governor said were the reasons behind this decision.
While inflation is slowing, given the signs of recovery in economic growth, the exchange rate volatility, and geopolitical risks, we have decided to maintain our current monetary tightening stance.
Right, so the BOK governor mentioned inflation. So Soo-jin, can you tell us how high have consumer prices have been here in the country for the past several months?
Well, they're actually showing signs of easing, especially in April. But there also hasn't been enough economic data yet for the Bank of Korea to be confident that consumer prices are stabilizing. The Consumer Price Index, a key gauge of inflation, fell below the 3% range in April for the first time since January. But consumer prices had seen on-year increases of 3.1% in February and March. And the 2.9% on-year growth in consumer prices in April still remains above the central bank's target of 2%. Prices for agriculture goods, livestock, and fishery products were up 10.6% on year in April. Fresh fruits saw huge price increases, with the price of apples up by more than 80% on year and pears up by more than 100%.
Right, so besides inflation or high prices, are there any other factors that really led to the BOK continuing its decision to freeze its interest rate?
Yes, so another factor was the U.S. Central Bank's rate freeze decision. The Fed, in its most recent May meeting, decided to keep interest rates unchanged for the 6th consecutive time. And Federal Reserve officials are saying there's no rush to cut interest rates despite inflation showing signs of easing. The U.S. Labor Department showed that consumer prices in the United States were up 3.4% on year in April, slightly less than the 3.5% on year rise seen the previous month. But several regional Federal Reserve Bank presidents said in separate interviews just last Thursday that more economic data is required to be confident that inflation is on course to reach the 2% target, suggesting that interest rates will remain high for longer. And minutes from the most recent Federal Open Market Committee released on Thursday also showed that there were concerns over a lack of confidence in the slowing of inflation. Let's take a listen to what an expert said on this.
The short answer seems to be the Fed is not giving up on that target, but it's an arbitrary target based in some academic, some practical research. And if the Fed is unable to hit 2%, I would not be surprised to see if the goalposts move a bit closer to 2.5%.
Given these recent commentaries, economists are not expecting to see rate cuts until the Fed's September Open Market Committee at the earliest.
So could you tell us what's the current interest rate gap between the United States and Korea? And I think a lot of people will be curious about why this is influencing or impacting the Korean Central Bank's decision.
Well, the gap's actually quite big right now. In fact, it's at its largest ever at 2 percentage points, and because of this, it's quite unlikely that the BOK will cut interest rates ahead of the United States. And here's why they won't, according to an expert.
Well, specifically, if the U.S. interest rate is higher than Korea's, as it is currently, then we expect Korean investors to invest more in the United States because the returns there are likely higher. So we expect less money coming into Korea, and that makes the Korean won weaker while making the U.S. dollar stronger.
Right, Soo-jin, last but not least, the Bank of Korea also released new economic projections on its meeting on Thursday. So can you tell us what they are?
Sure. So first of all, the BOK raised its economic growth outlook for this year to 2.5%, up from 2.1%, which further adds to projections that the key interest rate will not be lowered for the time being. The BOK governor said that the forecast was raised mainly because of external factors, such as the robust global IT sector and strong growth in the U.S. economy, as well as signs of recovery in domestic demand. And this year's inflation forecast was maintained at 2.6%.
Right, so I guess this means that the Bank of Korea will continue to keep a close eye on prices as well as the Fed's monetary decision. All right, thank you so much for the wrap-up, Soo-jin, today. We really appreciate it.
Anytime.